Good morning, traders. It's 7:54 a.m., 8:54 Eastern here on Monday, the 26th of June, 2017. I'm starting early today. I have to take my kids to their first day of camp, so I need to leave early with them. So this is the reason why I front ran the 8 o'clock Central Time start. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So there's a fair amount going on overnight. Uh, the primary thing is that gold saw a bit of a smackdown um, as an announcement came out of India that they're curbing ownership. Um, Gold got hit on the London Open. IFO printed and chatter built about India curbing ownership. That's the reason cited. Who knows? But overall, the market's fairly strong. The DAX up 80 points, 77 and a half currently. The Euro Stoxx up 33 points. Most of that is on the back of a strong IFO number out of Germany, and also a bailout, not a bailout, but actually the Italian government has decided to bail two banks and have them get absorbed by Italy's largest retail bank. So the banking sector is seeing a pop up. Also, a big investor is buying into Nestle and is propping up some of that sector as well. London's markets have been slower to react. Apparently, there's a lot of shorting going into Tesco, and also volumes are off 20 to 40%. And quote, trading was slow with many markets in the region closed for holidays to celebrate the end of Ramadan holiday. So volumes coming into Europe are fairly slow this morning. But overall, the market's pretty active. We're looking like we are skewed to the risk on side. Looks like money's going into the riskier assets. Again, the Euro Stoxx leading. Also, crude oil is popping up for the third day in a row, trading at 43.27, just above uh, Friday's high. Friday's high was 43.20. Crude is up 27 cents at 0.6% currently, followed by the DAX, the Nasdaq, Dow, and then the S&P. The bonds are also up today, up 9 ticks. That's how things are shaping up right now. Since it's Monday, I want to quickly run through the calendar going through today. We just got durable goods this morning. Durable goods came in weaker at negative 1.1% versus negative 0.6. Durable goods transports came in also weaker at 0.1% versus 0.4%. So overall, not so great there. But the rest of the day has us looking at pretty much nothing. The Dallas Fed manufacturing activity is expected at 10:30, but that's a very low tier number. For June, it's expected at 16.0. I'm not expecting it to move anything. We have, as far as speakers today, we have at 11 o'clock Eastern, we're looking for ECB Youth Dialogue with ECB's Draghi. So comments out of Draghi are expected around 11 Eastern. And then at 1:30, again, ECB Speaker Draghi opening remarks at ECB Forum on central banking. Okay. Uh, as far as the week is concerned, since it is Monday, how things are shaping up. Tomorrow, Tuesday, we get S&P Schiller and consumer confidence. Fed's Yellen, Williams, Harkin, Kashkari. Parade of Fed speakers there. And then Wednesday, we get the Eurozone M3 supply, U.S. advanced goods, wholesale inventories, home sales, Fed's Williams. In the meantime, there's the ECB forum is going to be going on for 3 days, the third day being Wednesday. Thursday, we get German GFK consumer and German CPI. We get UK M4 money supply. Thursday, we also get US core PCE GDP and Fed's Bullard. And on Friday, we get GFK GDP current account Eurozone CPI, and then in the US we get personal income, PCE, PMI, and University of Michigan. So Friday is the busiest day, but what we have this week is a sprinkling of releases throughout the week. So much the same as last week. That's how things are shaping up currently. That's how things look. As far as what we expected on Friday, here's what I outlined as my key trades, my top trade setups that I'm looking for, possibilities for Friday. I was looking for the market to start sideways, push up, fail to find buyers, and then find sellers instead, and to fall out of range, trade below the range, and then come back in and close within the range somewhere around the 24.32 area. That was the primary hypothesis. The secondary hypothesis is for the market to open sideways and then drop out, test below the prior day's low, and then make a higher low for a failed low, and then push higher and back into the 35.50 to close somewhere in the 34 zone. This hypo 2 was pretty much dead on. Hypo 1 it looked like it was going to work out, but it didn't. Real quick as a segue, here's what the gold drop looks like. The gold SOC for this drop is somewhere around the 1254.50 area. Uh, it dropped pretty quickly, about $20 down to 1236.50, and is holding below on pretty heavy volume. Again, this occurred right at the cash open in London. Okay, um, so here's what we got on Friday. This is Friday right here. We open sideways, very tight zipper. Uh, Drop into the prior day's range. This green line here, this dark green line, is the prior day's low, prior day's high. We test below, we poke below, we find buyers, a little bit of buyers. We have a higher low, very quick, very tough to catch. Consolidation back to the mid right here, and then we get the burst, the first impulsive move of the day. Impulse goes up to 6.5 points to 37.50. So now we've gone back through the MC point of control, and then because we're up in the MC point of control, we're expecting this chop here, like we got, to just sit there and chop around, and then it finally falls through, chop around, and then it ends up finishing at 34.50 or 34 and a quarter. So pretty much what was outlined. Tough to trade. I know I keep saying that, but there's an impulse pullback and follow through, but there isn't much of a pullback here. The impulse mid is somewhere against the IB. That would have been the ideal setup. And you notice that the 34 has been playing for some time. If I zoom out a little bit, you'll see the 34 played here, and played here. Look at these IBs. These IBs, the yellow line here, IB low is right around that area, 34.75. IB high at 34 even. IB high at 33.75. All within the same area. So the ideal situation for Fridays after the impulse to pull back to the low volume node, to the IB high, midpoint of this swing here, to give us an opportunity to get on. But the pullbacks lately have been very shallow when they did occur, making it hard to pick a spot where you're not just trading a breakout with the trend, and kind of plugging your nose and hoping for the best. So not the greatest overall. The market showed us a normal variation day with the point of control outside of the initial balance. The market ended up with a double top week high at 38.75, but the close was right against the point of control, right above the IB, fairly relatively bullish, but not incredibly strong. Okay, so we see that there's a a reversal here. Let's go to the 15 minutes. So we look at the 15-minute and follow these pink lines. These are the points of control. There's a point of control last Tuesday, Wednesday, Thursday. So the points of control are going down, down, down. Price was inside on Thursday, so we were consolidating. I came into Friday saying that we're likely to have a break pretty soon. And then what Friday did is it had a lower low and an inside high basically. It took out the prior high by a tick and finished in the middle. What we have here is a market that has basically been falling and is consolidating and is starting to curve up, as you see here in the movement of the point of control. Yes, I look at price. I look for lower highs, lower lows, or higher highs, higher lows. Higher highs, lower lows. Those mean something price action wise, but I also want to follow the point of control and see where the point of control is going. Let's clean this chart up so you can see it a little bit better. So you want to follow these points of control, these pink lines, and see how the market's accepting value. Remember, the point of control represents the price with the highest volume for the session, meaning that's where that's where most of the market did the most trading, and we see it kind of cup up or curve up into last week's at the end of last week with Friday. And so what we have here is a reversal, and what the market's likely to do is continue higher. Let's bring this back. Is continue higher. Looking at the overnight session. Oh, hang on. Let's close this. Look at that trend overnight. Pretty good trend. The volume is very light. It's fairly light, relatively light. It's not very light. It's about 15K short for this time period. But overall, the market, gapped down and has done nothing but push up. So we have a fairly strong uptrend, some pretty good news out of Europe, and it's squeezing right up against the overnight high at 42.50, and where we have a naked point of control, currently trading 42 and a quarter. The expectation is it's likely to continue higher overnight. So we have a P-shaped profile, right? Short covering as we squeeze prices higher, as we advertise prices higher, we find that buyers continue to push higher, and those buyers may be shorts covering. We don't really know who's doing what, but overall, it's showing that the market is squeezing out shorts this morning. What have we accomplished in our overall over the last few weeks? So we're in the fourth week of June, and overall, all we've done is balance around, and all we did is we moved the 35 MC point of control from 35 to 30 to 35 to 30 to 35.50. That's all we've done. We've basically just traded sideways. As I shift this profile forward, you can see on the left here, you can see it's filling in right there. It keeps filling in the volume. So let me back that off. So you see the volume just kind of filling in around the point of control. It's not really shifting anywhere. It's consolidating, and the market really, what does that mean? It means that the market really likes these prices. Look at this composite over here, this green and red, that's a delta composite. You could see that the market just methodically turns off, shuts off as it pushes higher, shuts off as it pushes lower, and is really liking this middle area here. I expect a little bit more of that. The market is pushing higher, and then eventually in the 48, 49 area, it's likely to find its sellers temporarily. I expect resistance there on the first go. So what do we have today? There we go. All right, so let's kill these flex levels. What do we have today? We have an open auction. We're likely to have an open auction. We're opening in a gap above. The gap above is about 3 points above, um, 3 points above the prior day's range. Remember, the prior day's range has this really weak high up here. We're likely to have an open auction. We're likely to make an attempt to move lower, and then find a base, right? Find a higher low. Can't draw with the mouse today. And then start to move higher. And our template day is going to be last Tuesday. So we're going to pay attention to last Tuesday. We're likely to get tangled up pretty good here at the point of control of 42. 41.75, and then we're likely to start moving forward towards the 47, the next key area up here at 47, and that's where I'm expecting for today. I'm expecting it to fight a little bit, to push down, find its buyers, and then the sellers are likely to back off, and therefore the buyers will likely advertise higher prices to find those sellers for equilibrium. So we're looking for 47.50 on the target to the upside. Now, if that doesn't happen, if we open, push this overnight high, and then end up with a failed high, this looks like a head and shoulders, right? A failed high that pushes back into the 38.75, I expect a bounce, and then a push into 35.50, and then back out as hypo 2. This is a more sophisticated kind of auction in that it tries up and then it has a lot of support below. In my opinion, there's a fair amount of support below at 38.75, 39, and then again at 35, and I expect it to come back out. And again, the point of control is expected to shift higher. The tertiary or the third or fourth hypotheses are trend down, trend up. You can figure that out. But overall, these are the key plays for today. I'm expecting the market to be very slow but deliberate. So today, I'm not expecting it to be, I'm expecting it to be a little slower going back and forth, but I expect it to be deliberate about the movement that it makes. Okay, so we're going to end up doing something today because we are reversing this trend down from the gap up of last week, last Monday. Okay, I'll leave you with those thoughts. I've got to go. I've got to go take the kids to their camp. Hope you have a great morning. I will not be commenting on the open, but I'll catch you later on in the morning. Take care.